Hello and welcome to ATFX, and this is our Japanese markets preview. If you'd like to get more of our in-depth analysis, please do subscribe to our channel. Right, as most people know, if you're looking at financial markets at the moment, Japan was a bit of a leader yesterday, and not in a good way if you're a Japanese investor, because the Nikkei in particular got hit very, very hard. And we've seen huge Japanese yen appreciation across the currencies. So we're going to be looking at both points and why that's happened in the next few minutes, and just to cover what's happened in the last few days, and there's been a lot happening, and what could potentially hit us hard in the next few sessions. So what's happened really over the last few days, and looking at markets, the fundamentals, or the underlying fundamentals to a lot of what we're seeing in global markets have changed literally in the last week. Two or three things have happened. So the main two things, especially related to Japanese markets, is we've had a hike from the Bank of Japan, and we've had a hold from the US Fed. On a currency point of view, I can show you this in great detail. The last moves we've had down, and here you go, like up near about 150.51, all the way down to nearly 141 yesterday. There's some big interest rate differential moves. Now, also what we've had is a complete turnaround in the risk appetite and sentiment for the market, which has seen stocks smashed across the board. We had one up day last week, if my memory serves me correctly, in the US, which tends to lead into the Asian session. And then yesterday, there was, there's no other words for it. It was a sea of red in global stock markets. And a lot of people have been calling for this for a while, because we have seen, excessive analysis onto a lot of the stocks, especially the AI stocks in the US and indeed Asian markets. And valuations have kind of gone through the roof. And so some are seeing this as a bit of a natural correction. But given the volatility we saw yesterday, that there could be more of the same coming. So Nikkei got hit more than many and some of the other markets, because you've got a central bank that has moved into a tightening cycle, so pulling against central banks across the rest of the major economies, and maybe just the exception of the RBA over here today, that are entering easing cycles, so giving a bit more money in. So Nikkei got hit really, really hard yesterday, and we are seeing headlines coming out already today from Japanese officials, both from the government and from the Bank of Japan and Ministry of Finance, on that excessive market volatility we saw. Looking at the charts, let's move over. This is the dollar yen hourly chart, and it looks like the extent of the moves looks like a daily almost. Mid-July, so only 2 or 3 weeks ago, and the market moving down it moved down from just shy of 162. We hit 141.60 or 70 yesterday, and not much was going through. It was a real dramatic move, and as you can see, volatility is high. These are massive moves. I'm going to bring this chart in to give you a much better idea. And as you can see, it looks a bit messy, this chart, but I've left those support trend lines in just to show how many of them broke. And also, once the support trend line is broken, sometimes it will act as resistance. And you can see how this one did yesterday. Bounces back up to that resistance, came back, hit again. Now we've broken through, and 147 has capped so far today. And as you can see, these are not small moves we're talking about in dollar yen. These are hundreds of points. They look smaller just because of the extent of the moves that we've had. So key factors that we're seeing now, when you see risk aversion and market sentiment dropping in markets, they go for haven products. One of the main haven products that you see here is still the yen. And so not only have we got the Bank of Japan coming into a tightening cycle against the other major central banks, and I'm going to show you euro and sterling yen in a second as well. They're here, you can see them outside. But you've also got flow coming into the yen and safe haven trade. So that's exacerbated the moves that we've seen. And once again, as I said, traders are expecting more and more of these flows. So just to have a quick look across to the crosses, do not ignore the crosses. We have had some huge moves. They are massive trading opportunities as well. As you can see here, 175, it topped out 175.42 euro yen, similar time that we saw in the dollar yen. We got down to 154.41 yesterday. So you're talking 20 big figures. They're massive moves. That's euro yen. Sterling yen, similar sort of move. Capped out once again, same day really. 208 We got down to 180 yesterday. You're talking 28 big figures. These are massive moves in currencies. And one of the premium risk on, risk off trades that we've had, and this goes all the way back to old people like me trading in the GFC. Aussie yen was smashed in the GFC. You had high going into the GFC. You had high interest rates in Australia, and you had zero pretty much in Japan. As you can see, again, another massive capitulation in these trades. 109.46 down to 90. You're talking nearly 20 big figures. And as you can see, the volatility is so high. We've jumped 4 big figures in the last few sessions as well. Traders expect to see more volatile conditions, especially in the yen pairs, especially in the yen crosses. And I don't think we're going to see the end of this. So, you know, the rule of thumb is it's probably still, while negative sentiment is existing in the markets, it's a sell on rallies. But the other thing that you need to account for in these conditions is we are getting big percentage moves every time they're starting to pick up momentum. So your capital management has to be a lot different to what you normally have. You know, plan for these 100, 200, 300 point moves, whereas sometimes you'd be planning for 50 or 60 point moves. So capital management is paramount. Technical levels, as you can see from these charts, they are still relevant, but when that momentum gets going, they will not hold the market. Momentum slows it up, and then you can get back in and then reassess where you're going. So good luck trading out there. There's going to be plenty more moves. These fundamentals are changing. They're changing like on a daily basis at the moment. While those fundamentals are changing, and while we're getting updates from different data and different central banks across the world, we will see this volatility. So keep an eye on that US data. It's a very thin data week this week, and that's possibly a problem. But really, the changes we saw last week, to my mind, weren't massive. Yes, we didn't get a high. Non-farm payrolls were lower, and yes, unemployment rate did rise in the US, but there weren't huge numbers, like a 60,000 miss on non-farms. We've had a few of those to the top side in recent months. It did not have the effect that it had. So maybe there's a change of sentiment coming. Trade what you see in these markets, but good luck.